Hello and welcome to the 10th of our ACCA F5 lecture recaps. This one was on relevant costing. So what are we talking about first of all with relevant costing? Well, we're talking about one-off opportunities. Up to this point, we've been thinking of our production line and thinking about how to calculate our costs of production. Now we're starting to look at one-off opportunities. So we're thinking about maybe when you have excess capacity and someone says they want a product made, should you use that excess capacity to make it? And we're thinking of things that aren't regular production. So one-off projects, one-off contracts, one-off costs. So what we need to find out is what is the minimum price we can charge. And to find that, we need to work out the relevant cost of undertaking that project. So how do we do that first of all? Well, the first thing we need to do is we need to apply our relevant criteria. So we always apply these three criteria. So relevant costs must be firstly cash. Okay, they have to be cash, not depreciation. Remember, depreciation is just an accounting entry. It's not an actual cost. So not depreciation, cash only. The next thing, it has to be a future cost. Okay, not sunk costs, not things you've already paid. So it has to be in the future. It has to be additional, i.e. it has to be caused by undertaking the project. For example, you may already pay rent. If you allocate some of that rent to the project, well, that's not relevant because you're already going to have to pay that rent. So it's not caused by the project, it's not additional. So apply these relevant criteria all the way through. So looking at some specifics then, when it comes to machinery, if you've bought the machinery already, that's a sunk cost, so it won't be relevant. Depreciation is not relevant, it's not cash as we discussed. Incremental costs will be relevant, and we're thinking of things like higher costs here. So if you're given higher costs, those will be relevant. They are additional, you'll have to include them in your calculation. When we're looking at labour then, if labour is paid already, it's not relevant, okay? If it's paid already, it's not relevant. You need to also ask yourself, can the labour be used elsewhere? So if you're given a question and it says the labour could be used elsewhere on another project, you need to calculate your cost of labour like this. Okay, your variable cost of labour plus any incremental overheads plus the contribution foregone from that alternative. Materials then. When it comes to calculating the relevant cost for materials, there are several questions you need to ask yourself to come to the correct answer. The first question is, are the materials in stock? If they're not in stock, the relevant cost is the current price, and that's simply because you have to go and buy them. The next question is, if you have the materials in stock, are they regularly used and replaced? If they are regularly used and replaced, then the relevant cost again is the current price, because you're going to have to use and replace them, so the relevant cost is the current price. If not, you need to ask, have they got an alternative use? If they don't have an alternative use, then the relevant cost is the scrap value, because that's all you could have used it for, the scrap value. If yes, then the relevant cost is the higher of the value in use and the scrap value, i.e. the higher of the alternative you could have used it for and the scrap value. So that's how you calculate the relevant cost of materials. Learn those little questions, apply it to every scenario, and you'll get the correct answer. That brought us on to make or buy decisions. So what are we talking about here? We're talking about whether we should make components or maybe buy them in from a supplier, or indeed an in-house service. Should we use our in-house service or should we source it externally? And what you've got to do is compare the costs or savings made through buying, and that will only come through the specific details in the scenario. So just set it out in a table and compare the costs or savings through buying, and we did that in class. So other considerations you need to think about when you're deciding whether to make or buy. Remember that you'll create some spare capacity in your firm or on your production line. So you need to think about how you're going to use that spare capacity. Also, you need to think about how your workforce is going to react. They may not be too happy, they may be worried about their job. You need to think about the reliability of the outsourcer. If you stop using your in-house service, well, you're going to lose that ability. So you need to make sure your outsourcer is reliable and does sufficient quality work. And that's our next one, quality considerations. Can the outsourcer provide a quality product? And remember, you're going to lose that in-house service. So you're fully reliant on buying in, and that's a consideration for the firm as a whole. So that was our session on relevant costing.